They say history doesn't repeat, but it often rhymes. In 2025, the rhythm of global finance begins to sound familiar once again. Central bank meeting rooms are lit late into the night. Interest rate curves are bending downward. The Federal Reserve announces rate cuts, and markets around the world tremble in response. Investors smile for the first time in years, and the media celebrates with optimism. Inflation seems to be tamed, and growth appears to return. But beneath this calm surface, seasoned eyes are turning cautious. Is this truly the beginning of a new era of easy money, or simply the quiet before another storm? Over the past decade, the world has witnessed the wildest journey of money in modern history. In 2020, as a pandemic swept across continents, central banks slashed rates to zero. Governments printed money at record speed to rescue frozen economies. Cash flooded the markets, stocks surged, housing prices exploded, and cryptocurrencies soared. It was an era that looked like prosperity but was built on fragile foundations. 3 years later, inflation erupted like wildfire. In 2023, the Federal Reserve raised rates at a historic pace, freezing global liquidity overnight. Real estate collapsed, funding dried up, and companies went bankrupt. People realized that the so-called boom was only an illusion, one built on the fantasy of cheap money. Now inflation cools, growth weakens, and once again the world stands at a crossroads. Rate cuts appear to be the only answer left. Each cut feels like a dose of adrenaline for the economy. Governments can borrow more, corporations can refinance debt, and investors rush back toward risk. Stock markets rebound, housing awakens, consumer confidence returns. Money begins to move again, and optimism fills the air. But history whispers, cheap money is never a free gift, it's a beautiful trap. In 2008, America's deep rate cuts saved the markets, but they also inflated the housing bubble that soon collapsed. In 2020, the zero-rate era fueled a global market frenzy, which later turned into the inflation crisis of 2022. History has never truly changed, it only wears a newer mask. Monetary policy swings endlessly between rescue and restraint. It is both a medicine and a poison. Every round of printing and easing shapes new forms of greed and fear. This time, the story is more complex. The United States is cutting, Europe hesitates, Japan debates, and China cautiously adjusts. The entire planet is tied together by invisible chains of interest rates. A single decision in one country sends ripples through the rest of the world. Capital searches for new havens, flowing across borders, escaping low returns, seeking higher ground. In the past, rate cuts boosted trade. Today, they may trigger a massive migration of money. Money no longer simply moves, it escapes. For investors, a rate cut is both a gift and a warning. Bonds rise. First, tech and growth stocks follow, real estate begins to breathe again, and speculation quietly returns. People start to believe the bull market is back. But every era of easy money ends the same way. Too much optimism, too much leverage, and too much fragility. The smart money never cheers for rate cuts. It watches, adjusts, and waits for the turning point. Meanwhile, ordinary people feel a different kind of reality. Mortgage rates fall, credit limits rise, auto loans become easier. Consumption revives, but savings lose weight. There is more money, yet it feels lighter. Inflation may no longer dominate the headlines, but it lingers quietly in daily life. Lunch is more expensive, rent is higher, wages barely move. The story of money is not just about Wall Street, it's about every wallet in the world. On the other side of every rate cut lies a question of trust. Trust in governments, trust in markets, trust in money itself. And every time that trust is stretched too far, the cycle begins again. Prosperity breeds risk, risk breeds bubbles, bubbles led to collapse, and collapse calls for another rescue. Like the change of seasons, it never truly ends. So, are we entering a new money cycle? Perhaps yes. But maybe it's the same old circle repeating with new faces. Because at its core, money is not about numbers, it's about trust. And when that trust is stretched beyond its limit, the printing machines of the world roar, back to life once more. History doesn't repeat, but it always echoes.